Hello and welcome to another update video about Cardano. Well, that is an exciting day here. Cardano nearly at 56 cents. So yeah, it has moved out of its target area now. Yeah, we had here this yellow target area, which of the overall downtrend here was the area in which Cardano could, with a high probability, turn around and get back into an uptrend. Okay, so what is Cardano doing now? Cardano, we see a lot of strength currently in the chart, more than with many other cryptos, especially in the top 10. However, it still doesn't change my view. Yeah, I mentioned many times before, should we really invalidate here the previous wave count? In my opinion, it would still not be bullish. It would still not be bullish. That's my view. Yeah, that's my view, and everybody has to decide for themselves. Do you want to take the risk, go in, yeah, and risk that prices will drop once more, or do you wait until you have confirmation? That is what everybody needs to decide for themselves. I can't tell you to buy or not. I've been buying Cardano with my buy orders that all channel members can see on Discord throughout. Yeah, they've been triggered. And you know, I'm happy with an ADA below $1 anyway. So long term, absolutely amazing prices. I believe in this project. There, I have to say that as well. But does it change anything of my view that we're now going higher? Not at all. Not yet. Yeah, because in the end, you still, even in a wave 4 here, yeah, we talked about that, you would still expect higher prices, or you would have to expect within the wave 4 higher prices. Now, my immediate sell-off scenario here has been invalidated. So I, of course, had another primary expectation. This has been invalidated. Therefore, obviously, we have these invalidation points to understand from which point of view we have to change our point of view, and we have to adapt and adjust, because, you know, we are not making the charts here. We can only try to make sense of the charts and try to look for the advantage in the market and try to understand the chart. You know, that's what it's about. Try to understand the chart. And now this immediate sell-off has now been invalidated, which doesn't mean that it won't happen, right? So I still expect a lower low. I still expect we are in a wave 4. However, the way in which we are moving here has changed. So we have now invalidated this immediate impulse down, and we are now looking, yeah, probably at an extended wave 4, unfortunately. And the way I'm looking at this, and to be honest, I take everything out here now because we need to look at this fresh. This is unfortunately what sometimes can happen, that these triangle patterns, yeah, these corrective wave patterns here in a wave 4, in which we, in my opinion, are. I need to put that on the chart again. In this wave 4 here, a triangle can move around, it can extend. That is just the nature of these triangles. So the way I'm looking at this at the moment is that we obviously came down here in a wave 3, or a wave 5 of 3, and then we are now moving up in a wave 4. It looked like the wave 4 was already complete. That is what I assumed when we moved down here. Now, this has now been invalidated. So, therefore, we can understand all of this still as an ongoing triangle. Yeah, fortunately or unfortunately. So this is what my primary expectation is now. And you need to understand that these lower level wave patterns, they just do often get invalidated. It's just the nature of the beast, I would say, right? And you know, therefore you have these resistance support levels to understand when you have to move to a different scenario. What is key is to understand, do we move around back into an uptrend? And at the moment, I can't see that. Don't forget, we had these peaks before, yeah, also with ADA, and so far they've been fake outs in this downtrend, and we had massive moves up, yeah, and we've always moved down again. And for now, the downtrend hasn't been broken anyway. So in such an extended triangle at the moment, we can expect, at the moment at least, that here what we have is an wave A on the upside. Probably need to do it like that. It's a wave A, then of a triangle, yeah. This here will be a wave B of a triangle. that we are now probably forming here a wave C of a triangle. Again, similar to Bitcoin, this can go all the way up to the wave A high, which is at 61.5 cents. So this would here again for this scenario be the invalidation point. 61.5 cents. Absolutely here. So this would be where it shouldn't get above. After that, we would expect a wave D to the downside. And unfortunately, these waves get longer and longer. And a wave E here to the upside. This is how we see it at the moment, yeah. So basically you would move up in a wave C, come down in a wave D, move up in a wave E, and then exit the triangle to the downside. So it's becoming a bit longer than expected, this triangle. But yeah, I've pointed out the risk that this might be the case in various videos so far. So it's something that we always need to, well, not expect necessarily, but we always need to keep in mind that those corrective waves can extend, unfortunately. And it seems like this is the case here at the moment. So, and in this wave C, that would mean we're now going up and we come down once more in a wave D and move up in a wave E before we move down. Now, this is one scenario. We can also understand this as some kind of a WXY scenario, which is another possibility where we would move here into this area, because with this triangle as it is looking at the moment, we would not get into this area. What is this area? I explained it in the previous video. When we are in a wave 4, well, which we are, you have certain target levels that you reach with a high likelihood. And for a wave 4, we have here the 38.2% FIB level and the 50% FIB level between 64.7 cents and 72.8 cents. This is the area with the highest likelihood normally for a wave 4 to reach. And we haven't reached it yet, yeah, but we have reached the minimum requirement for a wave 4, which is the 23.6% FIB level at 54.7 cents. Now this was reached, and because we moved down here quite strongly, we had to expect that the sell-off has already started. Now, of course, we've been proven wrong in this case, and the market has decided to turn around. And at the moment, the next likely scenario for me is that this is just an extended triangle. In this triangle, we would actually not reach this area, but we need to keep in mind that we can still reach it. Yeah, so if we break above the invalidation point here, above 61.5 cents, we will, with a very, very high likelihood, get into this area between 64.7 cents and 72.8. Before then, with a very high likelihood, there's never 100% guarantee, but with a very high likelihood, the meltdown will occur. Yeah, this is what we have to expect. And the structure from my point of view at the moment does not yet support new all-time highs. That is my current view. I just can't see it. This would probably be, I mean, we could extend this target area a bit higher, as I explained in the previous video. All it can't do, and this is unfortunately the nature of these extended waves, we're in a very volatile space. This wave 4 could theoretically get all the way up to the wave 1, so basically to $1. Yeah, but we also need to understand that a wave 4 and a wave 2 normally shouldn't differ that much in length. So that would be a huge wave 4, which we normally wouldn't see. So yeah, for me, this is the area with the highest likelihood. Should it really get above that level, I might need to rethink this. I would still give it the 61.8% FIB level at 81 cents, but this would all still be part of this corrective wave at the moment, in my opinion. Yeah, and that's all I can do. I can only give you my opinion and no guarantees, and also no financial advice. As you know, I can only try to make sense here of the chart with the possibilities that I have. And yeah, as I said, we might be in this wave C. So in this wave C, though, we can also look a little bit into the detail. And if we understand this as a wave C, then it has to contain an A, B, and C. So what I see here at the moment is that we might only be in the wave A of the wave C. So I don't want to confuse you, honestly, but I know a lot of people are interested sort of in the shorter time frame wave counts. So what I see here is that because we can't really count a 3-wave structure here, and this wave C in such a triangle here would contain of 3 waves, would contain 3 waves. So you would have something like an A, B, C that would need to happen to complete this wave C. Yeah, every wave in this triangle has 3 waves. And if we assume we are now in this wave A, then we can also count this, however, as a 5-wave move, because the subwave has 5 waves. A wave A has 5 waves. So in this case, yeah, in a triangle. So we can count this as a 5-wave move. And in this case, I would count this here as some kind of a leading diagonal pattern. So wave 1, and we're coming down in a wave 2, moving up in a wave 3, oftentimes the most bullish or bearish wave, depending on which direction you look at, coming down in wave 4, and we might now have completed here this wave 5 of the wave A. Yeah, so this is a complete 5-wave move as far as I'm concerned now. So it should for now actually be exhausted or nearly exhausted. That's how I see it, especially as we seem to be already slowing down a little bit. And now I would expect at some point here, expect the wave B down. And then especially, as we have hit resistance here as well, as you can see here around 56 cents resistance point, previous resistance. So that might really be that wave A. Then we come down in a wave B. That would normally retrace between in a zigzag, which is this pattern here, between the 38.2% fib level and the 61.8 with a high likelihood. So it would come down here. Let's say this is the top of the wave A. I don't know. That could also extend. That I don't have, I don't have the crystal ball. I don't know if that might go a little bit higher. But from the peak of the wave A, it would retrace usually into the region of the 38.2 to the 61.8% fib level. And that would be between 52 cents and 49 cents. That is where we would see that. And then from here as a wave B, it could move up again in a wave C. And then complete this higher level wave, degree wave C. Now this unfortunately also suggests that we might really have to deal here with a bit of a longer correction, a little bit with a longer sideways movement that we have to get used to. It was not my primary expectation and also not what I wanted, because I'm a friend of making, fast decisions, get it done, and finish this overall correction off. Unfortunately, it seems a bit like we have to deal here with a longer correction. Could the overall low for Cardano be in? Yes, but with a low likelihood, in my opinion. Similar to other cryptos, they all reached my overall target areas that I've been talking about pretty much for 5 to 6 months, and they've come into it. I hope this journey in the last 5 to 6 months helped a lot of people to save money, because we expected these current price levels. The thing is now obviously that we are here still, in my opinion, in a corrective pattern. Now this could evolve into something impulsive, absolutely, but at the moment with a very low likelihood. This is still very much at the moment a corrective pattern here. So let's see how that unfolds. I will keep you updated certainly, and hopefully that quick Cardano video here helps you to understand where we currently are in the chart. At least that is how I see it at the moment. Okay, so hopefully you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then check out the channel membership. Thanks a lot for watching. Bye bye.